Hello everyone, and welcome to the episode number 20 of Just Dario Cigar Time. Today we are gonna talk about Nvidia again, but in particular we are gonna talk about how Nvidia has nowhere left to hide. Why such a strong statement? Because Nvidia really had a lot at stake with Core Wave IPO, and I'm not just referring to their investment, but effectively not only the whole narrative that there were needed like millions of GPUs in the future and a massive data center capacity to develop AI was actually all condensed in the success of the Core Wave IPO, but also all the fraudulent round-tripping scheme that Nvidia used to inflate its revenues and convince so many people about the narrative that it kept pushing for so many years of this need of massive capacity that only them could provide the GPUs for, relied a lot on Core Wave IPO success, because Core Wave has all the elements of that fraud that has been replicated so many times with other partners all in one place. As I described in the article several weeks ago before the IPO started. Today, I don't want to repeat myself again and explaining why Core Wave is such a massive fraud, what was the role of Nvidia, Microsoft, and Magnetar Capital. Today, I want to bring the attention of what happened during this IPO, what mainstream media didn't tell you, and what's going to happen next. So first of all, let's go through the timeline of events. All the mainstream media comes out, they say CoreWeave is going to go to IPO, targeting $32 billion valuation, potentially putting up to $4 billion worth of share for sales, and they already have an overwhelming demand and the IPO is 5 times subscribed. Okay, sure. But then after this, a few days later, news comes out that CoreWave cut its IPO target valuation to 27 billion and reduces the size of shares for sales to $2.7 billion. Okay, that's a bit strange. What happened? There was not such a overwhelming demand for CoreWeave that would have grown massively due to the only provider of cutting edge AI data center that could see its revenues growing at a 30% plus compounded annual rate for the next several years and so on. So what really happened? What happened is that incredibly, and something that you very rarely see, few days prior to the CoreWeave IPO, you have Microsoft cutting its booking for CoreWeave data center capacity that amounted to $12 billion, or 80% of all the future booked capacity for CoreWeave. This news was immediately denied by CoreWeave, but of course, several days later, have been confirmed. But in the meantime, OpenAI pops up, and a company that is really struggling to raise capital, it's running a money incinerator business of the tune of several billion, commits to purchase $12 billion or future data center computing power from CoreWeave, coincidentally covering the hole left behind by Microsoft. This, of course, is not a coincidence at all. There are two very important elements here. On one side, as I flagged for the first time already many months ago, Microsoft is cutting OpenAI loose. And that is a huge shift that many people still didn't realize yet. As a matter of fact, Microsoft realized that OpenAI is a losing business model, is the wrong business model for AI. And in cutting them loose, they are basically giving a strong sign to the world that all the narrative that was perpetrated for so long was wrong. And they are ready to lose billions of dollars in order to avoid even greater losses in the future. Because in cutting OpenAI loose, Microsoft will have to significantly write down the value of its investment unless, for a miracle, SoftBank and the other investors still committed to support OpenAI succeed to bring this incredible fraudulent company that steals IP, that steals copyright work, that steals artists' work in order to build their model for a tiny profit, as a matter of fact, is going to be effectively brought to IPO at some point and dumped to the public before it will inevitably collapse. And I keep stressing this out. OpenAI needs a miracle for this to happen. But it's not the topic of today's podcast. So let's go back to CoreWeave, okay? And several days after this news of OpenAI committing to purchase 12 billion of data center computing capacity in the future, everything seemed fixed. But no, another news comes out. And the news was even worse because CoreWeave defaulted on the loans it had against Blackstone and other lenders. So what happened specifically? The problem was not that CoreWeave didn't pay like interest on installment, but they call it like an administrative default. I mean, the mainstream media tried to swipe that under the rug and hide it in order not to spoil the IPO effort. But the truth is that CoreWeave management tried to bring cash abroad in other SPVs and buy GPUs out of those SPVs, effectively taking collateral away from the loans themselves, because all those GPUs were supposed to be bought from the American entity, and on this American entity, the lenders had an agreement to take possession of all those GPUs in case of default on the loans. But again, only on that American entity. After this news, investors started to asking themselves serious questions about this IPO, about what was being told to them. A lot of people started to distance themselves, and incredibly, even in the mainstream media, with, for example, like Mark Faber, like live on CNBC, starting to highlight all the very questionable part of Nvidia narrative and information filed in S1, and a lot of elements that effectively made all the potential negative side of the deal greater than the positive side of the deal, according to which investors should have bought into this IPO. So the stage was set for an incredible disaster. And here you go, out of the blue, Nvidia comes out, and even if the company was still roadshowing and marketing its IPO at a price between $55 and $47 a shares, Nvidia, few days before the IPO launch, puts an anchor order, $250 million, at $40 per share. That's the ultimate sign that this IPO was bound to be a complete disaster, and there was no demand whatsoever for that. So clearly, everything that the mainstream media were telling investors several weeks before was a complete lie. Myself, a few other people, we were warning people about that, but still they carried on till the facts that surfaced were so obvious and so overwhelming that even themselves couldn't continue lie anymore and support this IPO, because if they lose whatever is left of the credibility, whatever is left of their audience trust and so on, effectively that is going to ultimately impair their business. So you see this incredible shift in a span of few days, and here we are with Core Wave IPO going live on Friday. And the first incredible thing that happened is that while the IPO was supposed to start trading at 12 p.m. Eastern times, the shares couldn't make a price for the first hours of, in theory, live trading on the shares. Why? Because if they allowed CoreWeave to start trading right away, the price would have crashed because it was set to open at $32 a share at that time. But they waited one more hour and it ended up opening at $39 a shares and didn't take long. Despite no possibility to short the shares available, it didn't take long to trade at a loss as high as minus 5%, in a clear sign that there was no demand whatsoever, and the IPO was in reality supported by the underwriters, JP Morgan, Morgan Stanley, and Goldman Sachs. Reason why it didn't fall through the floor. And ultimately, these very same people ended up bidding the shares that, surprise, surprise, at the end of the trading day closed exactly at $40 a shares. I mean, do you need any more evidence to understand how deeply fraudulent and manipulated has been all this company and all this IPO process from start to end? I hope you don't need further evidence. This is why now we move on talking about why, after all this objective disaster, why Nvidia has nowhere left to hide. There are two very important elements. The first element starts from 2 weeks ago at Nvidia GTC, where for hours Jensen Huang was on stage preaching the whole world how there was massive need for data center capacity for millions of GPUs and blah, 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 and so on. And then in reality, it comes out that CoreWeave, that is the epitome of this narrative, right? CoreWeave doesn't have real revenues. The revenues come from its own investors that are clients as well, plus a very questionable support from Microsoft that bought a way larger amount of GPUs, bought the exact type of technology, and somehow needed to rent even more capacity from CoreWeave. I mean, clearly this was completely like part of the fraudulent scheme, but it couldn't last forever because Microsoft was bleeding billions and they couldn't hide the hole anymore. So it dropped them, and without Microsoft, effectively CoreWeave had no revenues. All this should make everyone understand how all the narrative of overwhelming demand for capacity, need for massive amount of electricity to run this data center and so on, is completely like made up. And this should have been clear already in January when DeepSeek came out and showed the world that all that capacity and GPU were not needed, but these people kept perpetrating. But now there is black on white, the evidence that they were lying through their teeth. And the fact that investors didn't believe the recent lie, didn't FOMO into this Core Wave IPO, is an ultimate sign that that house of cards of lie is finally collapsed. The second important element to consider here is that Core Wave IPO failure and Microsoft significantly cutting capex and not even denying it in the news anymore is prompting many investors to ask themselves, is there really an overwhelming demand for all these GPUs out there? Are all these tens of billions of capex that have been pledged early in the year by all the hyperscaler gonna remain there? Were all those billions meant to be all in cash, or there is something wrong in the picture that we missed? So you have investors already asking themselves this question, and then in the same week prior to CoreWeave IPO, you have Alibaba CEO that effectively breaking the old narrative that allowed Alibaba shares to increase so much in value recently. He said, we do have a bubble in data center capacity. A statement supported by all the data filtering from China, where apparently now many companies are trying to cope with the overbuilding of data centers in the recent years that now are being left completely unused, and of which value is evaporating at an incredible speed because of the high level of depreciation of this type of components these data centers are based on, with even a greater risk that all these components that they purchased for an incredible amount of money, they might all of a sudden be obsolete because of the new and the more incredibly efficient technique of training LLM model that DeepSeek brought up in front of the eyes of the whole world, and that now nobody denies of its effectiveness, in particular on the cost side, anymore. So putting all together, we had companies that in reality were not making real revenues of this data center build out, and furthermore, the demand for GPUs is obviously falling through the floor. As if this wasn't enough, another news comes out, but many in the sector knew already. Because of Nvidia GPUs being extremely inefficient, in particular from an electricity consumption perspective, China is considering banning their use. And they wouldn't bother that much about that because clearly you don't need all those like super efficient GPUs in order to develop cutting-edge AI model. And this, again, is another nail in the Nvidia fake and fraudulent AI narrative that is being threatened by the fact also that other hyperscalers have been developing their own chips since a while. And even if Nvidia kept claiming that no one could catch up with them, the reality is that many people realize that the newest Nvidia model that the company is trying to release every year in an incredible effort to turn their product that should have been lasting for years into almost a consumer product in order to maintain an incredibly unrealistic revenue growth. These people that are set to lose billions, are going to cut short on their mistake. They're developing their own chips, but also there are LPUs, semiconductors in development. This stands for Learning Processing Unit, that are specific semiconductor optimized for building AI model. Because let's not forget, NVIDIA GPUs were in reality a type of semiconductor created for computer graphic. And they have been simply repurposed to AI because NVIDIA was struggling since many years to expand its potential market and resume growing because the market for graphic cards was completely saturated. They tried with crypto first. It failed with crypto mining, and they even got fined for lying to the investors and effectively all the elements of security fraud with regards to the sales and expectation of future sales for crypto mining rigs that were running on NVIDIA GPUs. And they are doing it again with AI. But now, as we've seen today, there are all these elements that are objective and undeniable, and investors aren't blind anymore. So what is going to be the future for NVIDIA? Personally speaking, I believe that this weekend, a lot of institutional investors that have very heavy bag of NVIDIA and resisted so far are really questioning the premises of this investment and the risk exposure against this name. And honestly, the conclusion that many investors are going to come is likely going to be to cut their exposure significant. And let me be clear, here we are in a situation where we have an incredibly overcrowded trade, and who comes out first is going to suffer the lower amount of damages and losses. So I wouldn't be shocked if next week we see a significant pickup of selling in NVIDIA shares, in particular after the end of the month of March. Why after the end of the month of March? Because for sure, all investors will try their best to window dress their books into the last day of the month and the quarter, so to charge the highest amount of fees possible to their clients. But then, starting from the 1st of April, is free to all once again. Reason why I expect a significant turbulence in the market, specifically in that day, because a lot of investors are going to rebalance their risk, are going to position themselves for what is clearly going to be a potential recession in US, leading other major economy into the recession in the foreseeable future, and the falling of so many angels that have been overhyped till in the recent past and that ended up trading at an as-in high level of multiples. Don't worry too much though. As we discussed in the last podcast, central banks are clearly totally supportive of these markets. Government, of course, are totally supportive of these markets because they cannot afford a stock market crash of a magnitude that will make the one of 1929 pale, considering the level of overvaluation reached, but also the level of indebtedness of the public sector and the staggering amount of losses buried into the global financial system. As a consequence, everyone will continue do all they can to try to support this market, but in particular to keep volatility low. So while some stocks, and among these, I think Nvidia is going to be one of them, might suffer sharp declines, don't worry. The overall market is going to continue to grind lower because, as I mentioned in my article earlier this last week, the bear market already started. So the market is set to grind lower, potentially accelerating the more and more people realize that there is no bull market anymore and it's time to look for lifeboat to leave the Titanic, because those that are going to be left behind are going to have far less chances to survive the incredible turbulence that is ahead. With this, I conclude. Thanks a lot for listening to me today, for subscribing to my channel, for following me on X, for reading my research on justdario.com, and for all the support that you continue giving me, and for which I am deeply grateful to everyone. Have a nice weekend and talk soon.